Hello traders, today is the 17th of May 2010 and this video is about Elliott wave. Okay, in the previous video, in one particular previous video, I was talking about triple rising top. Okay, you may never heard about this particular way of trading, triple rising top, but that's the way I usually locate the end of the Elliott wave pattern. Okay, because during the uptrend, according to Elliott, we will find 5 wave. Okay, usually we have 5 wave and ABC plus ABC correction. Okay, that's the pattern. Okay, so during the uptrend, if at the end of the 5th wave you should see a triple rising top. Okay, every Elliott wave, if you see at the end of the 5th wave, you should see a triple rising top. Okay, on this chart you will see here I have this top here, and then this is a second top higher than the first one here, and then the third top that is higher than the second top. Okay, and the price is rising. Okay, anytime that I'm trading and I see a price rising like this, and I count the first top, the second top higher than the first one, and the third top higher than the second one, I'm selling at the third top. Okay, I don't care what the price is doing next, I'm just selling here with a very limited stop loss. Okay, 26 pip, that's enough. Okay, and then you are in the trade. Okay, and you wait for the price to show you which direction is going. Okay, so you sell it right here. Okay, this is during the uptrend, because if you count the wave, the 5 wave will be first wave, okay, second wave, third wave, fourth wave, and the 5th wave, and the 5th wave will always end at the end of the third rising top right here. Okay, that's the end of the cycle, and then we have the A, B, C pattern. So you sell at the end of the 5th wave here, and you stay at the top here with your stop of 26 people, whatever your risk tolerance is. Okay, and then you just wait and see what the price will do. Okay, usually the third wave should be the longest wave, but because we are on the 5 minutes, we don't worry too much about all these criteria. Okay, we are very flexible as a trader. Don't take everything like a science. Okay, it shouldn't be exact. Okay, it shouldn't be too long. Just take it easy. Use other criteria, like you can see here. There's this top here being validated here, and the same level here again. There's another top here, and we have again the triple rising top. It gives us a bit of confidence to enter the trade here and to sell. Okay, we don't want to buy here. Okay, but the very important is that we have to protect our capital as a trader. We are always, the first question is, how much am I willing to lose in this trade, or how much am I willing to risk in this trade? Okay, if you know and you analyze the trade carefully, and you decide, you measure it, the damage that the trade can do to your account, you don't have to worry too much about it. After that, you see also, before you even consider how much risk you are willing to take, you analyze also the reward that the trade can offer to you. Okay, so in this particular trade, at the end of the third wave, we sell here with a very tiny stop loss. Okay, but if the price moves down, we are likely to have double the amount of risk we are prepared to take in this trade, which is make it very appealing to us as a trader. Okay, because we want to trade like professional traders. Okay, we want to get in at the very important levels. We want to get in at a valid resistance level or support level, but the most important is that we want to protect our capital. Okay, so this is the USD yen currency pair with on a 5-minute chart, just to show you quickly the triple rising top, signaling the end of the 5th wave. Okay, or the end of the Elliott wave cycle. So we sold it right here. Okay, and we wait for the price to pull back down. Okay, so as we sold it right here, you see the price went down, okay, nicely here, but pull back, but we didn't take profit here because we are expecting a bigger profit. You may decide what you want to do. The price went down, okay, and then the pull back to retest the same level. Now the price struggling here. Okay, we are expecting the price to continue the movement to the downside. Okay, so keep watching, please. So this is about the Elliott wave pattern, how to locate clear the end of the Elliott wave cycle. Okay, So in order to locate the end of the Elliott wave cycle in the uptrend, one must count the rising top, okay? If you have a triple rising top like here, this top here, okay, and then the second top must be higher than the first top, and then the third top must be higher than the second top, all rising, okay? As soon as you locate the triple rising top, you must sell at the third top right here, okay? Because if we count our wave from here, okay, you see there was a kind of a consolidation in this zone here. I will try to highlight here if you want to accept that as a consolidation. These are not, this particular method is valid on the daily chart. It's very powerful for swing trading on the daily chart to count the wave and count the rising top in order to locate the end of the cycle of an Elliott wave in order to participate in the change of the trend. Is a very powerful trading method on the daily chart, okay, on the weekly chart, on the 4-hour chart, on the daily chart, okay. But right here it's only 5 minutes. We are playing with this tool here. It may work, it may not work, but we don't want to. That's why we don't want to risk too much in this particular trade, okay. So if I highlight this zone here, forgive me for the movement here, I consider this zone as a zone of consolidation if you want to accept that, okay. It normally should be horizontal, but just accept it like this because we are on 5 minutes, okay. So the price went down. We call this zone as a consolidation. The price was going up and down, up and down, up and down. Here you see the candle sign. We call it as a consolidation because if you see the Bollinger Band, you'll be squeezing this particular section here. If you look at the size of the candle here, that's how you know that the volatility is low. If the volatility is low, then you know that you are in consolidation period, okay. That's how we know that we are in a consolidation period, by locating that the volatility is very low. So the size of the candle, if the size of the candle is very, very small, you know that you are in a consolidation period. And then after this small size candle, the price start going bigger size. You see, boom, 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 first wave, okay. So the first wave is the one always coming out of the consolidation zone. The volatility start increasing now, okay. And then there was a pullback. It's the second wave, and then the third wave, which is this one, and the fourth wave, this one, and the fifth wave, this one, okay. End of the Elliott wave cycle right here, and then we sold it right here, okay. End of it, we sold it, okay. So that's how you use the Elliott wave. So the volatility, okay, will indicate to you whether you have consolidation by the size of the range. The range candle will tell you whether you have a high volatility. This candle, this long candle is telling us that we have a high volatility. This long candle is telling us we have a high volatility. You see, this is a high volatility period. That's what I said to you. The market pattern, okay, trend. You see, there was a, if you want to accept, this is only 5 minutes, okay. Bear with me. If we were on a daily chart, it will be more solid in explanation. But I'm on a 5 minutes, so bear with me, please. Do not blame me for saying things that are wrong. Please accept that, okay. So there was a kind of downtrend on the 5 minutes, okay. So there was a kind of consolidation on 5 minutes because of the size of the candle, and then we have a new trend that has started here. So we know that the market pattern is trend, pause, trend, okay. That's what's happening non-stop on every time frame, okay. Trend, pause, trend, trend, pause, trend, okay. Or the trend will pause, the trend pause, and then the trend will change, or trend pause and continuity or continuation of the same trend. In this particular case, on the 5 minute chart, okay, the trend has changed, okay, down and down, consolidation, and then up, okay. Now we count the wave, okay. How do we know that we are at the end of the Elliott wave cycle? By counting the top, okay, because a lot of people have difficulty to know exactly when the cycle is finished. Count the rising top, the rising top. That's the way I do it myself. Maybe you never heard about the rising top, but that's the way I find out, okay, because I spend too much time looking at the price, okay, because the price is the #1 indicator. All this I'm telling you now is by sitting in front of the computer, looking at the chart, okay, focusing on the price, looking at it non-stop. Because if you want to understand something, you have to look at it, okay. That's how you understand something. You cannot understand anything in this life if you are not prepared to look at it, okay. You have to keep watching it, okay. Even if the thing is mysterious, if you keep watching it, okay, at one point it will reveal itself to you, Okay, so though the things in this life that does not allow themselves to be revealed to the people, they are the most mysterious thing in this life, because if they expose themselves, we will be able to understand them clearly, because all we need is to sit and observe them till we understand. Same thing we have to do with the price also, the stock market. Keep watching it. I'm not saying that spend your whole life in front of the computer, but sometimes sit down, just watch the price. What the price doing? You observe a lot of things. Maybe you discover something new. So this video is about how to locate the end of the Elliott wave pattern, and we study right here. I'm coming to the end of my 10 minutes with you too. I hope you enjoyed the video. So till next time, enjoy yourself and be very happy. Thank you.